Hello, everyone, and welcome to another edition of the Forex Technical Market Update for July 22nd, 2015. Okay, we are looking at a a a daily chart of the Japanese yen versus the US dollar. And yesterday we saw that the market, the 124.50 level that we were speaking about, was rejected, and the market traded down below that 124.50 level. But what has been happening since this morning is that the market traded down to its daily S1, and what we see is a recovery out of that daily S1, and the market is heading back up. And I suspect we may see an attempt again to take out this 124.50 level on the Japanese yen. Remember, this market is in a uptrend, and if you're betting which side this market will go, I would be leaning to the upside of the market as opposed to the downside, because this market is in such a long uptrend. Support is down by the 123.50 level, and resistance is at 124.50. So we have a 100 pip band here where the market is meandering in. Looking at the British pound versus the Japanese yen, we had a decline just as yesterday, but the market has recovered nicely and is attempting, or will make an attempt, to take out the 194.37 high. We're currently at 193.68, and the market will attempt to challenge that 194.37 high. If that is taken out, the next area of resistance is up at the old high near the 196 level in the British pound versus the Japanese yen. And this is another market that has been in a pretty strong uptrend as of late. And if you're leaning on which side of the market to go on, I would be looking at the upside. Looking at the British pound versus the US dollar, the British pound is up today after several days of relative weakness, and we see that the market is looking to challenge the high up at 156.50. But please note that above 156.50, 157, there is a weekly R1, as you can see here. I've drawn the blue line. We have a weekly R1, and that could pose some resistance in the British pound versus the US dollar, and that's definitely a level to keep an eye out on. If the market does decline from here, we have to keep in mind that the weekly S1 is down at 154.76, and if the market does come down, the market could bounce off of that 154.76 level. Looking at the euro, the bounce happened yesterday, and off of this 108 level that we have been speaking about was good support, and we see that the market is now coming back down, and we will just have to wait and see if the market ultimately comes down to retest this 108 level, or we see further gains from here. The euro has been in since May. The euro has been in just meandering around between 108 and 114. There's not really much happening here in the euro in terms of direction, and that is to be expected sometimes after such a massive decline that happened late last year. The market declined rapidly and is now just meandering and consolidating, and that's one of the reasons why we have such stagnant positions in the euro. Okay, taking a look at the Australian dollar, another relatively stagnant market. I mean, since we broke down below this level of 75.50 or so, the market has been trending downwards, but not rapidly. It's a slow move down. And I did say yesterday that the market could attempt to challenge this trend line, and we did not reach the trend line, and we see that the market is once again coming and pressuring the downside. British pound versus Australian dollar, a market that we said was in a strong uptrend and that broke out of a triangular consolidation pattern a couple of months ago. This market is still in an uptrend, and this is one of the reasons why, if you are trend trading, you can hold on to some of these positions very long, because as you can see, since the breakout of this triangle, the triangle was here roughly. Since the breakout, you have the market is just steadily going up, and there hasn't really been much any reason to exit this market as of yet. It's just steadily heading to the upside. The same thing with the British pound versus the Canadian dollar. We see that the market is in a steady uptrend, and we are currently at a brand new high in this market with the British pound versus the Canadian dollar. And that's why you can hold on to these positions for a relatively long time if you are long this market. Another market that we're looking at that is declining is gold, and we see that we are finally getting the follow through selling from that break. For you, those of you who have been following these updates every day, you know that we speak about gold quite a lot, and we said that the market was in a strong downtrend. And when you're in a downtrend, it's better to stay on the short side of the market, and the market broke down below the critical area near this 1138 level and is currently at 1089. And I see that this market can even go down further into the 1000 level, or even as far down as 900. Please note that this market has broken, or is attempting to break, this trend line all the way back from 2006, 2008. We have the 2 points here. The market came down. I know a lot of bulls in gold was anticipating that the market will bounce from here. It still could, but as of today, it does not look like this market is going to respect this trend line and bounce to the upside. It looks like we're really looking to break this trend line. And that's one of the reasons why it's good to look at weekly charts, monthly charts, to see areas of support and resistance. For example, in the Canadian dollar, I spoke about this yesterday, where we are up against the 130.38 level. And this area is an area of significant resistance. And if we do close above this level, especially on a monthly basis, we could see further gains in the USD Canadian dollar. So you just have to be very careful around these levels for the Canadian dollar. Okay, thank you very much for listening. If you'd like to have these trades sent to your trading account automatically, you can click on the link below this video analysis. Thank you very much for listening, and have a good day. Thanks.